JP Morgan CEO Jamie Dimon was on CBS this morning over the weekend talking about some of the gloom Americans feel about the economy. He said, quote, there are a lot of legitimate concerns that Americans have, naming ineffective government and immigration as examples, but said he himself is cautiously pessimistic about the economic outlook. Joining us with more, we've got Paul Krugman. He is a Nobel laureate in economics and the author of the Substack, Krugman, Wonks Out. Paul, thanks for joining us and congrats on the newly launched Substack. Talk to me about your thoughts on the economic outlook right now. How would you describe it?
Okay, right now, if you did nothing on policy, we would appear to be in pretty good shape. We got low unemployment, low inflation, we'll see whether maybe there's a tech bubble that's going to burst, maybe not, but there's no imminent threat on the horizon except for the possibility of crazy policy by the incoming administration. And so I've watched multiple transitions, and at this point, every previous administration, you had a pretty good idea of what they're going to try to do actually in their first year. Now we have campaigned Donald Trump, who made all kinds of wild proposals about mass deportation, Smoot-Hawley level tariffs, and then a lot of people on Wall Street and business are betting that he won't actually go through with all of that. And I think actually nobody knows. Nobody knows what the policies are actually going to be. But if we get the Trump who campaigned, then it's a very serious shock to the economy.
Well, do you think the market's still looking at this a little bit too optimistically?
I think so. I mean, now we'll know maybe more once we're a few months in. But right now, the market seems to be getting a bit of a wake-up call in the last few weeks, but people have been pricing as if Trump 2.0 is going to be like Trump 1.0. A lot of noise, but in the end, really relatively modest tariffs on China and not much on anybody else, and no major disruption. And that's not a good bet. The people around him are different. He's different. So yeah, the market is still, for the most part, pricing a more or less normal presidency. And there's been a clear pattern. If you look at reporting, anonymous sources tell reporters, Trump really isn't as crazy as he sounds. And then Trump immediately, in an outraged mood, goes on Truth Social and basically says, yes, I am as crazy as I sound. So what to believe?
Well, if you look at the 10-year, maybe we're getting the story there. If you take a look at this chart that we got in from Torsten Slok that I know you pointed out as well, you can see the degree to which the 10-year has moved to the upside following rate cuts, which bucks the historic trend. Do you think that bond vigilantes are trying to tell us something about the incoming administration, or is the story something else?
Well, that's, again, we don't really know, but it does kind of look. I mean, I don't think that anyone is yet worried about a default on U.S. debt. That's still not in the price. But we are looking at a combination of tax cuts, so substantially expansionary fiscal policy, and tariff hikes, which will be inflationary. I think it's very hard to believe that the Fed, the expected path of steadily declining Fed funds rates is going to happen, and so yeah, I mean there is I called it the insanity premium. There is clearly a signal from the bond market, which I think tends to be a little bit more rational, if you might say, than the stock market. There's a signal from the bond market that people are seriously worried about what's coming down the pike.
Paul, does the benefit of, when you take a look at some of these policies and zeroing specifically on tariffs, and Dimon commented on it yesterday, talking about the fact that, hey, maybe they could be good or used for good when you talk about global competition, when you talk about security concerns. Do the benefits at all outweigh some of that risk, or how should investors be evaluating that?
There's a huge difference between strategic economic nationalism, which needn't be tariffs. I mean, even the Biden administration did quite a lot of subsidies to national security sensitive industries, subsidies to green energy, which had a strong nationalistic component. And that makes a fair bit of sense. But 25% tariffs across the board on Mexico and Canada, that's basically ripping the heart out of the whole North American manufacturing complex. There is no such thing as a single national industry in autos or anything else there. So yeah, you can make a case for some strategic policies, which would probably mostly involve subsidies rather than tariffs. There may be a tariff in some cases, but that's not what we're hearing. I mean, I think it does. You should ask what's the rationale that we're hearing from the people who are going to be making these decisions, especially Trump. And Trump thinks that we are subsidizing Canada because they run a trade surplus with us. If that's, which is complete nonsense, and if that's the mindset of the people in charge, some hypothetical case in which tariffs might be a good thing is going to bear no relationship to the tariffs we're actually going to get.
Paul, I want to end on the wildfires. I know you published a piece on this morning, and obviously horrific devastation that we were seeing out in California. But I wonder about the macroeconomic impact. Is there a potential risk to something like the deficit, which you brought up earlier, that we're not necessarily thinking about accurately in the wake of those fires?
Okay, yeah, I did, great thing about Substack is I can post sort of in real time on stuff. And this is a huge shock. It's enormous devastation. Historically, however, the U.S. economy is almost inconceivably big, the whole national economy. And big economies can absorb even really large natural disasters without much visible sign. I remember looking at Japanese macro data around the time of the Kobe earthquake, which was much more lethal than anything we're seeing in LA, and the property damage relative to Japan's economy might be comparable, and you cannot see it. You can't see it even in the quarterly growth numbers. So I would say probably it's not that big a deal for national GDP. It's probably not that big a deal for inflation. It's an enormous human tragedy, and for the state of California, obviously its biggest metropolitan area has been really severely damaged. But again, people always make the mistake with the U.S. You talk about a number, you say, well, Dr. Evil, $1 million or even $1 billion or even $100 billion. Those are all small sums compared with America.
Paul, it's always great to get some of your time. Thanks so much for hopping on with us. We look forward to continuing the conversation again soon. Paul Krugman, thanks so much.
Thanks.